It's been another wild week in the markets. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Charley Martinez with the University of Tennessee. Charley, it's great to see you.
It's good to see you. It's been a wild week for sure.
It has definitely been a wild week. And we're going to get into that. We'll talk some market highlights a little bit, but we'll dig deeper into what's been happening. But first, let's kind of go over and just recap what happened this week in the markets.
Yeah, for sure. So, between last week and now, there's been a lot of things that have occurred. But one of the most interesting things has been watching the futures responses versus cash responses. And so as we dive into the cash side of things, live cattle prices closed at $240, which is up 18 cents compared to last week. But as we get into the futures side, December live cattle prices closed at $252.20, which is down $7.90 compared to a week ago. November feeder cattle future prices closed at $352.20, which had a big drop and closed $19.50 lower compared to last week. And then as we look at more cash side of things, choice box beef was at $375.90 at the end of the week, which is up $9.13 compared to last week. Select box beef was at $357.61 at the end of the week, which is up $7.34 compared to last week. So we see cash side up, future side down on the beef side of things. But then as we start getting into the other sector in the pork side, national base hog carcass closed at $89.92, which is down $2.98 from last week. And then the nearby lean hog futures closed at $81.90, which is down 47 cents from a week ago. So compared to, over the last week, we see future markets responding to various topics or various instances that have, really hit the headlines. But then the cash market's been relatively strong to steady or steady to strong across the country.
And it's really interesting, too, when you get into sale barns and some of those regional markets as well. And we're seeing a little bit of weakness when we look at like direct cash trade that took all week to kind of take in what's been happening and get some business done. And I want to get into that, and we will get into that, but I want to get through some of these other things that we normally talk about first before we go down this rabbit trail of volatility in the markets. As we take a look at weekly cattle slaughter, Charley, what are some things that you are seeing this week, and how are those numbers shaping up?
Yeah, so this week in the slaughter side of things, cattle slaughter for the week was at 573,000, actually up 6,000 compared to a week ago, but down approximately 52,100 compared to last year at the same time. And if you look at reports, you really don't see year-to-year differences. And so we actually calculate that amongst Josh and Kenny and myself in a workbook that we maintain. And we estimate it to be around approximately 8% year-over-year change or difference compared to this year compared to last year. And then on the hog slaughter side of things, hog slaughter for the week was at 2.58 million head, down 4,000 compared to a week ago, down approximately 7,200 compared to a year ago. And then year-to-date slaughter is estimated just under 2% lower compared to last year. So we're seeing an increase on that year-to-year change on the cattle side and relatively still holding par on the hog side of things.
All right. Today should be a cattle on feed day. It is not amid an ongoing shutdown from the U.S. government. It looks like we're not going to have cattle on feed numbers. No livestock slaughter, no cold storage. And at the rate I'm assuming we're probably not even going to get a supply and demand report for November. I
would venture that you're correct.
All right. So while the USDA is not releasing those data, pre-report expectations from some private estimators were out this week. As we take a look at those numbers, those projections for placements in September were down 8.6 from last year. All cattle on feed were projected or estimated to be down about 2%, and marketing's down 4%. So let's kind of go into some of those areas specifically. Let's start with placements. While it's a big number, Is it surprising, one, knowing the time of year we are, and two, thinking about we're still not bringing in cattle from Mexico as well?
Yeah, so I think you kind of hit it when we talk about placements. One, we know that number is going to be impacted by the total number of domestic cattle or domestic calves that we have in the supply chain. We know we're, towards the end of the fall run per se. So we know that so you have that impacting it, but then also we have the lack of, cattle coming in from Mexico. And so the number one, it's going to be lower. Doesn't surprise me when I see it, just because we don't have the Mexican cattle coming in, because this would be the heart of the time frame that we would be bringing in those animals, and that's quite a bit that's being held back or taken out of the equation. So we would expect that number to be roughly 4 to 5, somewhere around in there, and then you start sprinkling in the tight domestic supply, and then that's where you start really building up. If a 3 to 4% pullback, that's usually if you just do simple math, that's probably where you would end up. I wouldn't have been surprised if it was actually kind of bigger if we would have had a USDA number, just because they would have a handle on more of what was happening with the trade and what we were bringing in, and so that's the unfortunate part. But the number doesn't surprise me. I think that's, if you look at the range, I think it was ranging between 6 to 9 or high 8s. So it didn't surprise me. I would think 8 probably was the average, but I wouldn't have been surprised if it was higher though.
When we look at cattle on feed projected down nearly 2% or estimated at that number, what does that tell you in terms of expectations of where the herd is headed? Yeah,
so the 2% number, if we think back to the previous reports that we did have, a lot of them were saying, hey, there's going to be a lower, number being harvested. Slaughter was going to take, the expectation by USDA was that we were going to slow some of that down. So we would see that cattle on feed probably numbered not being extremely high like we were seeing in certain parts of the last couple of months of the year. And so that number doesn't really surprise me. But I think if we think about 2% reduction in total head, that somewhat equates to what we can expect in terms of total production. And what we can expect the last quarter of the year as we start ramping up for holiday season. And if we remember those last reports that we were getting last couple of months, the expectation was we were going to slow down production in the last quarter and then ramp up the first quarter of 2021. And I think some of that is with the expectation of feed being relatively cheap still for them to continue to feed out and hit those premiums and avoid the lower discounts that we're seeing. And so I think from just a business standpoint, these feed yards, they're basically a hotel. The longer those cattle are in there right now, the better, because they can still continue to spread out some of that fixed cost. If they pull those animals out, they don't have nothing to replace them with, then your total cost per animal starts to creep up because of bunk space rental. And then I think if we think about marketings, the number that you had said as well was, not surprising, just because we as we bring in cattle, we're bringing them in at a lower rate via the placements. And then we look at the marketings, and that number is actually smaller than the placements. We're going to see the cattle on feed starting to not be so much as different as compared to a year ago. And I think some of it at play is that these feed yards are, they would rather have some cattle in there than no cattle because they can't replace them.
The one thing we would miss, and we are missing from not getting an October cattle on feed report, is that quarterly data, specifically thinking about the percentage of heifers that would be on feed. As we look for signs of expansion or widespread expansion, how concerning or how problematic is it to not have that data set and know that we're not going to see those numbers or a look at those numbers until early 2026?
Yeah, and early 2026 is meaning the end of January in 2026. So that's the unfortunate side, right? Right now, producers, there's a decision for a lot of folks that is starting to become more common, which is, well, do I go buy a bred heifer? Should I raise my own replacements? What is the price expectation of females in the next couple of months? And usually we could say, hey, if we see the cattle on feed, we see the percentage of heifers that are in the yard, that kind of gives us an expectation of what markets are thinking. And now we don't have that. So we're kind of flying blind a little bit as we start to help producers with that decision. But also, from a feeding perspective, if you're a feeder and you really don't have any of those reports, you kind of really don't have an expectation of what supply can come down the pipeline. If people are still not holding on to heifers, you kind of have, you can think about it as, okay, I have X amount of supply coming because people are not retaining heifers still. Okay, that gives me a sign of what to expect. Well, now we don't have that sign from a feeding perspective, and it's like, well, I hope the best indicator is whatever is happening in the national market, and you kind of have to keep a tab on receipts and stuff like that. So I think there's a way to look for that data, but you might have to go try a different way to find it. Because for instance, we didn't have the July report, the cattle inventory report, for a couple of years. So what we started leaning into was the cattle on feed quarterly reports. Well, now we don't have that. We got the July, but we don't have the quarterly report now, and so it's still trying to piece together information to figure out what is the supply, what kind of risk management could be put in place if you're a feeder, or just what cost of these females and how many females are going to be available if you're a cow calf producer is the next question. So it's not fun to lose those reports or not have them, especially when we've been having periods of time where reports were not available, like the July one, and now we get it, and now we don't have a quarterly. So it's not fun to kind of be flying blind to a certain extent.
And I would say you're talking about replacement heifers versus bred heifers or bred cows. Kenny and I, a couple of weeks ago, had a really great conversation, and that would be one to go back into the archives and look at, if you're looking at the economics and thinking about expansion on your operation, some things to consider. And I think that was also in the cattle market notes that you guys contribute to as well. So definitely think about that and check that out as well. Okay. Here we go. This is kind of what I think everybody's waiting on, right? There's when Josh and I talked last week, was the post comment, offhanded comment. We're gonna import more beef from Argentina. Markets reacted negatively on Friday. Monday was a little bit better. There's been a lot of volatility this week. We've had a couple of days where feeders were limit down. Feeders and live cattle futures were both limit down today as we end out the week. I want to talk not necessarily about the comment, because we've digested that. We know what that does. Is there a combination between the lack of information that we're getting because we're missing some data sets that helps fuel some of this volatility in the market that runs with a negative comment, and then we're off to the races, and not necessarily in a good way? Yeah.
So I think Josh did a really good job of talking about the comments last Friday, where it was, hey, it introduces some uncertainty, and the markets reacted as such. And I think over the weekend and then Monday, Dr. Daryl Peel had put out a write-up talking about, hey, let's put it in perspective. Argentina, relatively speaking, is a much smaller producer. They've already sold some product elsewhere. So even if we were to bring in more product, it's probably not really going to do much to change any of the prices. And also, we're really probably looking at trimmings, not necessarily any other types of product. And I think the market responded back Monday and Tuesday, gaining back what it had lost, basically on Friday afternoon. And then we get into Wednesday, and then we had another, post, and then it caused the market to react again. And I think since Wednesday till now, on Friday afternoon, the markets have continued to, especially on the feeder cattle side, continue to go down. Live cattle somewhat has rebounded here and there, but relatively speaking, has not increased to where it was prior to. And I think when we think about the market, we don't have information outside of what someone sees with their own information that they're operating with relative to whatever the market information that they're looking at, whether it's their local market, a futures board, or some type of index like the feeder index. That's about all the information we have. And so when we have a market that is, not stable, and we get more information that could lead to anything that impacts the market, that uncertainty causes the volatility. And that's why we're seeing all of this this high, one day extremely low for the next couple of days. And I think one of the other things that's at play that really hasn't been talked about much. I've seen it reported, but the Mexico's Secretary of Agriculture is set to meet with the U.S. Secretary of Agriculture, Brooke Rollins. And when we start thinking about that, there's going to be a talk about should we open the border back up. And so we know if the border opens back up, that brings in cattle. When supply goes up, price fundamentally will go down. So I think there's also some of that now playing into the background of, well, we don't know. So the market has uncertainty, i.e. now we're going to have more volatility. And it's a kind of a holding, sitting and waiting pattern, basically based off whatever media or headlines are put out rather than any data that can be put out. And that's where I think we're just at this weird perplex or at this weird crossing of no information. The only information we have is from a media headline, and the markets don't like that because there's no fundamentalness to that. So that's why we're seeing lack of fundamental in the market at the end of the day.
I would also assume social media posts don't help, right? Like, so an announcement with no details doesn't help the market digest what it needs to. You think about yesterday, late last night. I think it was late last night. Like doom scrolling.
Days running together this week.
It is all running together. Comments and indication that trade talks with Canada are going to be suspended. Right. And we're still waiting for renegotiations or tariff and trade talks with China to resume. And that's up in the air. And when we get into this type of volatility and this type of uncertainty, Charley, how does that impact producers who may be at a position to consider expansion, first of all, and secondly, thinking about risk management, because I'm assuming big moves also restrict any ability to look into risk management tools as well, correct?
Yeah, so I think the last one's the biggest one, right? We basically have next week we have trade discussions with China. We have possibly border opening or closing or remaining closing with Mexico. And then we have now this uncertainty with Canada's trade talks. So we have three countries that are all three impact what happens in the livestock sector outside of other things. And if you had a risk management plan, let's say someone took out a LRP plan, 15, 16 weeks ago, and they were taking animals to market on last Friday or Saturday, or sometime this week, in their local market responded in a negative way to all the stuff that's happened, it probably got triggered. And you were protected, you were comfortable, and you were fine. But I talked to a producer on Tuesday about he markets animals every week, and he marketed them on Friday afternoon. I asked how it went, and he said, well, there was some pennies that I had to give up just because of volatility, but for the most part, it was still, I would say, steady to slightly lower. And that was just here in Tennessee. And if you look at other price series, I went and looked at other price series last week in Texas, in Missouri. It seemed to me that there was some price decreases week over week, but it also depended upon the weight class. And so that was one of the interesting things I thought that kind of stood out. But I think these last couple of weeks have really highlighted the example. And I might need to update my slides for my extension talks. But this is why risk management is so critical, so important, because we never know what's going to happen. I did a market outlook last Thursday in Rutherford County, Tennessee, and was talking about prices being great. And then Friday morning happened, and I was like, there went all my projections on prices. But so it's you never know, and it's important. But then we start thinking about rebuilding or anything like that. It's very hard to try to make a decision if you want to try to lock in anything. It's not really easy, and you can take a position, and it might be in the long run, it might be the correct position, but a margin call might end up eating all of your cash that you need in order to make other decisions with. So when we have this much volatility, it's not good if you're not hedging or if you're not doing any risk protection, but also if you're trying to think about things. Some folks operate where they get so many cents over the board And if you look at the feeder calf index, or if you look at a contract on a forward contract, these things hurt. They end up taking money out of your pocket at the end of the day. And so those are real realities. Forward contracts, LRP, feeder calf indexes, these end up having real implications for producers on their bottom line.
Charley, good to see you.
It was good to see you.
We don't have any reports. We don't have any reports to preview next week, but Kenny Burdine with the University of Kentucky will be in the house next Friday, and we will see what happens in the meantime.
Awesome. Good to see you again.
All right, so every weekly livestock market update delivered to your email box every Saturday. Go to brownfieldagnews.com. You can also submit questions and comments, and for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.